Really looking forward to this conversation as well. So without further ado, please put your hands together and welcome Naveen and Lucy. So give them a massive round of applause, everyone.
Good morning. My name is Naveen Agarwal. Prior to this is my third year doing this. And prior to this, I was Chief Customer Officer at Prudential, and before that, President of E-Trade. I've been talking about AI for quite some time, but today is less about me, it's about Lucy. And I'm pleased to welcome Lucy, who is CEO of AXA. Right here, Lucy, would you mind giving an introduction to yourself?
Sure,
Please.
happy to do it. Well, thanks everybody for joining. As Naveen said, my name is Lucy Pilko. I am the CEO of the Americas for AXA XL, which means I oversee our business in the US, Canada, and Bermuda across all lines in the P&C space and all segments. And excited to be with you all today. Prior to being at AXA XL, I've been there nearly 3 years. I was with the Boston Consulting Group for about 20 years, culminating in leading the insurance practice at BCG.
Thank you. So, Lucy, you know, we have this intelligence economy. So we think about all the industrial revolution and the intelligence economy, and the people all around us here are working very hard to cede control to AI. And you can imagine when that happens, it will create some risk in our system.
Yeah.
And as somebody who is managing risk, what are your views on all the plumbing that's being put in place, all the data center stuff that we talk about? How are the new risks showing up as we get ready for this intelligence economy?
Yeah, so I mean, there's a couple of different angles to your question, actually. There is a infrastructure question associated with this new intelligence economy, yep. And we could start there. And then there's all of the evolution of risk that comes, yep. On the back end in terms of companies that participate in that new economy. So from an infrastructure perspective, you know, the demand is clearly skyrocketing. I don't need to tell anyone in this room. Yep. You know, the demand for compute is through the roof, and all expectations are that will continue to grow. And so from an infrastructure perspective, that really means having the right data centers in place to support that new economy. But that's not such a simple thing, because you need more compute power, you need more energy, you need to really think about the location, yep. And or co-location of these centers, yep. And the new technologies that sit behind that and the risks associated physically, mm-hmm. with those technologies, cooling, battery fires, etc. So, yep. There's a lot of new things that are emerging. I mean, in some ways, data centers themselves aren't new. We've been underwriting that, and we've been putting those in place for years. But the magnitude of what we're talking about, you know, has really put pressure on a lot of the different component parts of this. Frankly, starting with the financing piece. You know, banks require a certain amount of insurance to be in place for the financing at the outset. So I think about 3 stages from a data center perspective. I think about the financing stage, I think about the build stage, and then I think about the operating stage. Yep. The financing stage is one that has been manageable so far, but is getting harder and harder because of the scale, particularly the hyperscalers. Data centers are, I mean, billions and billions and billions of dollars. The construction piece of this is actually the one which I think is running the smoothest right now. That is the closest to business as usual. Obviously, these require different, in some cases, different energy, new technologies, but mostly the building of the centers is something that the industry is well versed to handle. The operating side, though, is a whole new ball game. And I think right now, because the majority of the money is in the build stage, we're still not yet seeing the pain points that will be associated with the shift towards the operating side.
That makes sense. You know, 50%, half of NVIDIA chips have been bought, but they're waiting for the data centers to come up
Yeah.
so they can be deployed.
Yeah.
So we talk about capital being invested in the data centers, on the equipment that goes in there. That just kind of gives you the scale
Yeah.
at which the investments are happening and what needs to happen. You know, I live in, I'm in San Francisco Bay Area, and I have a place in Truckee in Lake Tahoe.
Yeah, beautiful.
And yeah, thank you. Yeah, and Lake Tahoe gets all its energy from Nevada.
Yeah.
And Nevada is at the center of data center revolution because of, you know, good solar and everything else. And Nevada Energy told Tahoe that they will no longer provide energy to us starting 2027 because of data center demand. Okay, so just think about like a whole city, a whole area is now without electricity, and we're looking at alternative ways to get the energy, which means the pricing. I mean, so the downstream effort of this is quite significant. Also, I mean, while data centers is one thing, if the AI agents will become the people of the future, think about, you know, all the operational stuff, all the servicing that will happen through AI agents. And if the data center goes down, basically your core infrastructure is down. It's almost like climate risk when you have a hurricane, you know, or floods where the workers cannot show up because the AI is down now, right? So talk about downstream risk that this creates, not just the infrastructure, but I think there's a whole thread of downstream risk that this creates.
No, your point is right. I mean, we've talked about the scale and the magnitude of the physical assets. The business interruption risk is one of it dwarfs in terms of the economic impact, the cost of the physical assets. And so when we think about what does this look like in operation, you know, we worry about the aggregation of risk, and in particular, we worry about a concerted cyber attack that takes down, you know, multi-cloud providers, many corporations at any given time. You know, we worry about the governance aspect of this. You know, the opportunity and the challenge of AI is the ability to deploy technology at scale in the push of a button. And frankly, not even the push of a button, because you have autonomous agents making choices. So a rogue choice can be everywhere all at once. And so the liability impact that creates is massive. So I think we are looking at a whole new, it's a new economy, right? And so we have to think about the economic factors across the entire application. You know, I think our Chief Information and AI Officer talks a lot about AI not as a tool, but as a state of being.
State of being.
You know, you really have to embrace it. This is the ecosystem in which we live in, and we need to think about all of the aspects downstream that could be impacted.
Yeah, I mean, in many ways, it's becoming the infrastructure. And if we see 3 to 5 years out, AI will become core infrastructure of our corporations, right? So it's a very interesting place where it's going to go. Now, let's switch from risk to insurance.
Yeah.
Right? So whenever there's risk, you know, think about outcomes and how do you insure that risk. How will this reshape insurance? And I mean, just to kind of complete that thought, on the reshaping of the insurance side, are we as an insurance kind of industry prepared for this?
Yeah.
This is an area we were dealing with cyber, and now we have this new thing coming up. How do you measure this? How do you manage capital? How do you reduce the risk overall? Thoughts on that?
Well, that's an easy one to solve. It's, you know, it's no big deal. You know, this is going to, I mean, just like, frankly, any industry, AI is going to reshape how we have to approach what we do. And, you know, I think this presents some very interesting things. One, like in general, risks are moving from being more physical risks to being more digital.
Yep.
And they are, in many respects, that is a harder set of things to manage with an insurance contract. You know, right now, our ability to be very definitive and give contract clarity to clients, which is what everybody wants. You want to know, what are you buying from an insurance perspective? How will it operate when something goes wrong?
Yep.
You know, in the case of the world that we live in now, you know, the types of risks we're looking at are less physical. They are more overlapping. Is it a cyber risk? Is it a tech E&O risk? Is it a physical damage risk? Is it a liability risk of other sorts? And so, I think this requires the entire industry to really think about what is it that we are insuring? How do we make that clear to clients? And the insurance is never, it's always a small portion of the risk.
Yep.
And so, really, we need to make sure that we're doing this work and helping do what we've always done, which is to quantify the economic costs associated with different potential risks.
Yep.
Not to bear all those risks, because companies never want to transfer all of those risks, but to have the dialogue with corporations about the risks that they're taking on, so that we can help companies think about how to future-proof their organizations. And for me, one of the big topics, and I mentioned it slightly before, is around governance. I do think, right now, companies, have a certain amount of control and expectation over employees, and the ability to transfer risk to third parties, to transfer risk at some level to the individual employee if they do something particularly egregious. Corporations won't have the ability to transfer that risk to anyone else in the context of AI. And so from a governance perspective, governance or policy is going to be whatever your code is. So helping companies figure out now how to build the processes and the capabilities to embed that kind of governance within their code, I think is one of the things that the insurance industry can and must do as we approach this new economic reality.
Yeah, I mean, what you're describing is a risk that can emerge from practically any part of the business, any part of the infrastructure, any part of we talk about third-party vendor risk. I mean, this just creates so much tremendous amount of unknowns in the world, right? Do you think this would lead to, you talked about governments, the two thoughts that come to mind. One is the risk of the governments themselves, right? Because the sovereign AI is going to be a big play. And when government themselves act badly, what do you do with that, right?
Yeah.
I mean, and that's something we'll have to deal with. And I don't even know if that's insurable. But the second part of that is, do you see this leading to a public-private partnership? Because as you said, the exposure is so large that no single company may be able to participate in that entire risk. And does that create like a forum where you see, for the fires, we have this, the fire insurance in California, where the first layer of fire is covered by the state, and then the private insurers come in. Do you see like this world evolving, where we start seeing this public and private partnership?
I think it's very hard to My first reaction to this question of the private-public partnership is that the legal environment is unclear right now. And it's hard to know how to set up a really successful private-public partnership without knowing what the exposure is, how the law is going to respond. I mean, I think that's one of the challenges that we as a society face right now, the ability for regulation and law and the application of law to keep up with the pace of change that we're seeing in the technology and the application of that technology. So my instinctual answer to your question is yes, absolutely. That because we're talking about things of such scale and where the vulnerability at any part of the value chain, whether that's chips, whether that's data centers, whether that's the liability down the road, is so interconnected, I think we will see more private-public partnerships. My hunch is that there'll have to be a lot of experimentation along that pathway, because we don't know exactly frankly, the legal construct in which we will be sitting and how those can be set up for optimal success. I mean, just like we test and learn in all sorts of things, this is going to be test and learning at major scale across all sorts of systems of our economy. Government, private sector, healthcare, I mean, you name it, it's going to touch every piece.
I can see that. I mean, and ultimately, what it points down to is the size of the liability could be so large. End of the day, the issue is that will it ultimately end up to the consumers? Because companies will, at the end of the day, say, hey, I need to insure myself against this catastrophe. So somehow, I need to price it into my products, which means whether it's businesses or consumers who end up paying for it. But let me kind of switch topics to, lots of folks here are from Insurtechs, right? And one of the things that you think about Insurtechs is they're here to help us, but they also all use AI.
Yeah.
And they have the same risks that we encounter in large companies as in small companies. And frankly, if the platforms are going to be built on top of Insurtechs, which are going to be built on top of foundational companies, Pope just talked about this Tower of Babel as when talking about foundational AI companies. As Insurtechs are building on top of that, right? And as large carriers start depending on those 10 companies that emerge from this, does that add risk? Does the innovators themselves are at risk at this point of time?
I mean, absolutely, but I don't think that is unique to the Insurtech sector. I think any company, small, medium, or large, has to think about the value chain in which they sit and the risks that come before them and after them and with them in that value chain. And I think because we are talking about things that can operate at such scale disproportionate to the size of an organization, the revenue of an organization, it does really require thinking through what those risks are. I do think at the end of the day, this piece around governance really matters, which is how is an Insurtech thinking about governing their AI agents in particular?
Yep.
I think that is the place that is probably the most important consideration for companies in this space. And then obviously, I think thinking very carefully about the partners that you choose and the partnerships and the structure of those partnerships that you set up, is an important way to manage risk. Insurance carriers, because we are regulated entities, you are serving regulated entities that have to be particularly thoughtful and cautious. It's not just in insurance, and it's in other regulated industries, about the third-party partners that we use. And so, I think that is one of the real challenges right now, is that because there is so much risk out there, probably figuring out how to be relevant to big insurance companies is a very hard business decision or business strategy to put in place.
Yeah, makes sense. I think basically every layer of the infrastructure has to be thought through in this. And that kind of makes me think about, since we have time, I'll talk to you about something which is not only on Earth, we think about risk in space now, right? Because we're thinking about all the satellites being launched and internet infrastructure being built. Starlink has become such an important part of the global economy now. War, all the stuff. How do we move from doing property and casualty insurance on Earth to now going into the next dimension? Any thoughts on where the world is headed there?
Well, that future already is here today. At AXA XL, we underwrite. We have a space team that underwrites satellites in space. And as we think about, we go back to the beginning of this conversation and some of the energy challenges associated with this new economy. This is one of the frontiers which really could help solve what seems like an unsolvable problem from an energy perspective. So I would expect to see more and more of this. That business for us has been relatively volatile. When things go wrong, they go really wrong.
Yep.
And it is expensive to fix. And so, I think this is just one of the frontiers that we will have to continue to explore, grow with, see how it develops over time. But my expectation is that we will see more and more of that type of energy source to fuel this economy.
Yeah, this gives a lot of entrepreneurs here new ideas in terms of how you think about new risk and create new models to value these kind of new things that are happening. And I think you talked about partnerships a little bit, so I want to kind of bring us back there. So you have these large foundational companies. You have Insurtechs. You have large carriers, all the distribution ecosystem that goes around it. Do you think that in our world, all the platforms and all this thinking that we have, does it all collide into a few large companies that come out of this and they win it all? or do you think it's going to be a whole lot of partnerships that are required for us to get where we need to go in terms of both managing risk and also providing insurance that's at the right price point that can serve this economy?
Well, I guess in some ways my response to that is twofold. I think when we're talking about risks at scale, you want a diversification effect. And so, but you don't want that to be too broadly spread. So there's probably sort of an intermediate ground. And we think about things like insuring data centers. No one carrier wants to be responsible for these entire mega data centers. And I think that's probably going to be reflected in all parts of this value chain. That said, every time you have a new technology and a new innovation, you always see a flurry of smaller innovative plays. Mm-hmm. And many of those plays aren't going to work out, but they are so important because they are bets on the world operating differently than it operates today. And those ideas often get gobbled up by bigger players. So I think we'll probably see that kind of pace of velocity of founding and failing at a smaller scale, even in this new reality. But I do think we're entering a world where scale matters. Scale matters in supply chains. Scale matters, in the ability to transfer. The data play is a huge piece of that. So I would guess we'll see some consolidation at the top, but still a tail of innovation that happens everywhere. I mean, you take the insurance brokerage side. It's been consolidating for, my entire lifetime, and there are still newly founded small brokers that pop up. And so, it is an interesting moment because you can be bigger than you seem with the technology that exists right now. Yep. But ultimately, I think data is the core asset, which is why you'll see a consolidation of real winners.
Yeah. It's interesting, there's a sense of this increased risk. And then there's this sense of, hey, listen, if everybody had a self-driving car, probably our accidents will go down, right? We think about if we don't have human workers, some machines will take over and you will have less workers come. So I do not know, there's this counter effect of technology. And the reason I'm bringing this up is humans are really good at understanding the risk of new things when they happen. We are not very good at understanding opportunities it creates to take away risk as new opportunities happen. So that's kind of really interesting kind of, irony that lives with innovation. And that kind of brings you into a little bit of talent. Because I know you're very passionate about talent. And sometimes, you talked about, hey, insurance industry does not want to change. We create friction because we want to preserve the old legacy ways, and there's knowledge there. The new economy would require the experience, but also the new expertise, right? As we all think about that, the talent part, especially as you're a senior exec in a large company, how are you thinking about this intelligence economy and talent going forward?
Well, I guess I would first say that, I think that the job of commercial insurers is to underwrite the economy. And the economy isn't static. It doesn't stay in one place. And, shame on us if we're not pivoting the way we think to support and encourage new aspects of innovation and growth of the economy. I think that's one of the most fun things that we do, is to work on the edges of new things and try to help grease the wheels of investment and funding and exploration of those areas. And if I take it from my client's perspective, from a risk manager perspective, the world is not getting any less risky. They pick up the newspaper, whether it's geopolitical risk, whether it's secondary perils from a property perspective, windstorm, et cetera. Certainly the dynamics around the cost of liability is going up. And then you add on top of this all of the shifts we've been talking about for the last 20 or so minutes. And so, from a corporation perspective, from a client perspective, they don't necessarily have any more money to spend on transferring risk. And because the world is getting riskier, I believe that our job as an insurer is to help them manage down that cost of risk wherever that is possible in order to create capacity for the new things that they will need to figure out on behalf of their organizations. And so, what does that mean from a talent perspective? That means that we as insurers need to invest more in both digitally and with human assets, leveraging the claims data we have to help companies mitigate, manage, prevent risk. And there's certain areas where we see tremendous upside to those types of investments, particularly on the property insurance side. But it's also true on the cyber side. The investment in security pays off for companies that do that. And so from a talent perspective, we need to be able to engage with our clients on that conversation and to bring scaled tools using the data to help them. That's topic one. Topic two is that we have a much more interconnected world of risk. And so the skills that my team needs to have is to be able to talk fluidly across what have previously been pretty cleanly defined MECE sets of risk. And we have some experience in doing this. Like if you go back over the last decade, the emergence of cyber insurance, really was an evolution of that, right? It came out of silent cover that existed in policies. And I think this current economy will have to, and the insurance behind it, will have to evolve out of cover that already exists. And we'll start to see new forms of policy language, et cetera. So from a talent perspective, I need folks that are embracing that concept and really able to work in this multidisciplinary way with clients and with brokers. And all of that, doesn't take into account what we have to do to transform our own operations. Whether you're a retailer or an insurance company or a bank or a healthcare company, we also have to look at our processes and our systems. In our case, it's underwriting and claims and actuarial, and figure out how do we take advantage of the capabilities that are coming with this new technology. And so just like other companies, we need to be continuing to invest in our talent to make sure that they are ready, willing, and able to make those kind of foundational changes in how we operate and support clients along the journey. I always start first with this outside piece because I think it is the bigger lever that we have as an insurer, actually, is to make sure that the whole economy can keep investing. Transforming ourselves is very important, but it becomes almost secondary to helping make sure we're doing our job of supporting the economy.
The clarity in terms of that purpose of insurance ultimately is kind of what you're aiming at. And I love the line that you said, underwriting the global economy, right? That's exactly what insurance is supposed to do. And as the intelligence economy happens, that just adds new dimensions to it. In terms of talent, the biggest discussion that's happening obviously is around job losses and risks of AI. And one of the things that's starting to happen now is we are seeing new jobs getting created. So there are new jobs of forward deployed engineers who are helping companies deploy AI in real time, right? So that's a new job, didn't exist before. That's happening. We're seeing labeling and all kinds of stuff, which is also middle and lower level jobs. So we as humans again underestimate the impact on talent, but the jobs will get redefined. And I do think that while there may be some bit of disruption, your point around if we have customer centricity at the focus of what we are trying to achieve, talent could be a great thing. I know we're running out of time though. Last question for you. If you think about kind of all the audience here, if they want to be prepared for the next 1 to 3 years, what counsel will you have for them, for us to have a resilient, happy insurance industry going forward?
Well, I think there's a risk in general of thinking within the box of whatever you are operating in today. And so I guess my challenge and my ask of everyone is to think end to end across the value chain. think all the way, the risk is interconnected. So you have to think all the way to the front of what are your original inputs, who are all the players that are supporting you before and after. And I think if we all think about ourselves in that broader setting, we will get more done faster because we will be less likely to have blind spots instead of just optimizing your piece, your Lego piece of the equation.
So more integrated thinking, end-to-end, at scale, to drive that clear value.
And that means taking on risk, right? Because it means being vulnerable across partnerships. And you have to do so in a smart way with contracts and NDAs and the like. But I think there's a real risk right now that we all hoard our own insights and data, and that will actually make for a much more brittle intelligence supply chain than a robust one.
Yeah.
And so really figuring out how can we productively share that information along the value chain and with your partners, whether those are your banks, your insurers, et cetera, it will allow us to create more resiliency. There will be almost infinite risk.
Yep,
so anything we can
absolutely.
do to take it down, we should.
Yep.
And that means sharing the information you have.
I totally agree. I mean, higher intelligence will require that sharing of data, the sharing of knowledge. Again, Lucy, thank you so much for all your comments here. Really appreciate it. Thanks to the audience for joining us. Thank you so much.
Thank you.
Thank you.